Global economic impact of escalating Israel-Iran tensions. The rising conflict between Israel and Iran is creating significant instability in the global economy, with a particularly profound impact on the energy sector. After Iran's missile attacks on Israel on October 1, global oil prices surged by nearly 9%, with Brent crude trading above $75 per barrel. This sharp increase highlights market anxiety over potential disruptions in Middle Eastern oil supplies, which account for nearly a third of global production. Any escalation could also threaten the Strait of Hormuz, a critical route for nearly 30% of the world's oil trade, leading to severe supply issues. Rising oil prices contribute to inflation across economies, with advanced nations facing a consumer price increase of up to 1.4 percentage points for each $10 rise in oil costs. India, heavily reliant on Middle Eastern oil, could see an even sharper inflation increase, exacerbating trade deficits and economic instability. Already struggling with high inflation and a weakening currency, Iran's economy could face additional challenges. With much of its revenue dependent on oil exports, any conflict that disrupts its oil supply chain may further destabilize the nation. Concerns over the security of trade routes in the Gulf have led to increased shipping and insurance costs. Nations like India, which rely heavily on these routes for imports, may experience higher trade expenses, impacting both inflation and economic growth. An all-out war between Israel and Iran could send oil prices soaring, disrupt global energy supplies, elevate inflation, and place considerable economic strain on both the nations involved and the world at large. The interconnectedness of global markets means these developments would have widespread repercussions well beyond the Middle East.